Good day everyone and welcome to Session Recap 20 June 2016. My name is Nenad and we had a great week behind us, although the pairs are moving quite violently now, so you might be careful. There is an important event in 3 days. You already know what the event is. We are really talking a lot about it. It's Brexit, so we need to be very careful, and of course I recommend trading with reduced risk. So if you've been trading lately, especially these days, try to reduce the leverage, because these events are pretty risky. As you could have seen, we had a gap on most major Forex pairs, and now US has been selling the equities, so there might be a possibility for all gaps to close. So before we delve deeper into the session recaps for this week, let's see the risk disclaimer. Online education materials are available by Admiral Markets Estonia for a global audience, so take into consideration that this information is not suitable for everyone. If you want to get a corresponding information on charting conditions and any other detail, you should visit Admiral Markets Global, select your country of residence, and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with the Forex market. By accepting the risk, you're also proceeding further with me. Admiral Markets UK Ltd takes no responsibility for information accuracy. This is solely my opinion, and it does not represent the actual suggestion for a trade. So this webinar is for informational and educational purposes only. So with having said that, I need to tell you to download Admiral Market Supreme Edition. It's definitely a great addition to your trading. And have in mind that here at this address you can check Web Trader platform. Also, don't forget that Admiral Markets is officially best MT4 broker. Okay? So, risk disclaimer, then I will go through questions. Yeah, I can see that there are actually yeah. Okay guys, so the screen was frozen, no problems here. You can see the risk disclaimer. Yeah. Okay, and quick look through your question. Nerad, I started a deep FIBO on H4, enter last week on Dollar Cad, 2 trades, 250 pips. Yeah, Nathan, more strategies on the swing side will be definitely given during some time, and well, pay attention to maybe a new swing system that I have already announced, but it will be done in 3 months, I think. Also, our price action training school will take swings also in its current form, so don't worry, swings will be covered too. Okay, so risk disclaimer concerning all these trades. So you need to give price a breathing room, definitely, and usually you enter within 15 pips of the predicted level if it's an agreement with your own system. I call the zones for entries POCs, or buffer zones. Those are zones where price is expected to react. Use scaling in, definitely. The scaling in is a great way to add in a trade. Contrary to many traders out there, scaling in is actually not done. You don't do it when the price is in profit. Scaling in is when price is actually in retracement mode. So scaling in is actually when you always get in a better price. If you see that scaling in is possible, use it. Respect your stop loss always, okay, because if you use scaling in especially, you don't want to move your stop loss. So always respect your stop loss. Add a spread to your stop loss. If you add a spread, definitely it will protect you from some nasty spikes. Even guys, if you don't use standard accounts, if you trade with ECN, try to add in between 2 and 5 pips just to cover for possible spikes. We take only one position. It's either positional trade or alternative trade. We trade first touch of the zone. Those are most profitable. Now, position trades are trend trades. Alternative trades are counter trend trades. And guys, if you see that I post breakout trade and scalp trade setup, then you can do it as a second entry. So once more, first we do either positioner or alternative trade. If we took one of these trades, the only way to actually add another trade is to trade either a breakout or scalp trade level if it's given in the slide. So these trades are independent from positioner or counter trend alternative trades. Depending on time and volatility, usage of trailing stop is highly recommended. We never ever take less than 20 pips of a profit unless you see that the price is actually trying to go towards your entry or is trying to hit your potential profit stop. Then you can actually close your trade a little bit before, but usually after 20 pips of profit, we think whether we should scale out, put our trades to break even, or close the trade. Money management and your trade, actually, your trade management, it's up to you. These setups are valid for today, tomorrow, and sometimes the day after tomorrow. Scalp trades should be done at or very close to important support resistance levels. All these trades are calculated by historical levels and Camarilla. Don't forget, guys, that this session recap is valid for most until early Wednesday, because on Thursday it will be Brexit. So guys, be very careful. There is a lot of volatility, spikes up and down. A lot of people are actually losing money, and if you trade, you want to be trading with low risk. Don't go for maximum profit potential unless you protect your trade. Now it's very volatile and you should know how to trade. Don't gamble, guys. Don't gamble now. You can add these levels to your system and pay attention to Twitter updates. Okay, to Twitter updates. The term pips pool means the maximum available number of pips we could have made on recap entries. So past weekly results, euro dollar 100 pips potential or didn't qualify. It depends whether you took the trade at the exact spot where the price rejected or you waited a little bit above, because there were actually traders who took it a little bit below our POC, couple of pips, but some traders actually waited for the full retracement, so it depends. Pound dollar, there was no setup due to Brexit. Australian dollar gave us 65 pip potential, even more. Dollar yen gave us 120 pips. Again, it also, if you waited a little bit more of a retracement, it wouldn't qualify. Saudi yen 120 pip potential trade. Aussie New Zealand 145 pips, even more if you actually went for more. So total pips pool was 110 to 400. It depends whether you've taken the trades or not, but definitely a lot of pips done even in these volatile times. This is a good pip count. So ODN was a trade of the week. Here is the market plan for euro dollar for previous week. So let's check the result. Okay, so euro dollar, this was last week setup, previous week setup, and here you can see the actual spot that I was trying to sell, and the trade that I gave you was 13.25 sell. The price went to, well, almost 13.00 and it rejected. Okay, but guys, you see, this was webinar time, so you could have seen triple rejection. If you see this, well, sometimes it's better to go with a low risk here, okay, and put your stop loss to 60 pips. It's not that big. Just lower your risk and go with a trade, because these were signs that the euro will drop, but that it's actually losing momentum for retracement. See, it was a triple top almost. Double top definitely, but almost a triple top, quadruple. So read the charts, guys. Read the chart. So this was the sign that euro dollar probably will not go to the upside and it will drop, and it happened. See? So euro dollar, you could have made some good number of pips. Pound dollar was no setup due to Brexit. Australian, you see, guys, today what's actually happening. We had a gap, and we still see some gaps on Forex pairs that haven't been closed. The thing is, whenever we see a good news like Britain will remain in European Union, well then then equities are up and all yen pairs are up and euro dollar up, pound dollar up. Now Americans are selling equities and you see some retracement, so maybe we could see a close of gaps. The thing is, now all pound pairs are sentiment driven. This is purely driven by sentiment. So guys, I always say sometimes not having a position in the market equals to having a profitable position. And if you listen to me, then you would trade with a 50% low risk, and you would definitely try to actually stay away from pound. But if you still want to take some trades, then okay, let's do it after the referendum, and I will post probable setups in tomorrow's webinars, so we could probably see what could happen. And well, you can try to play some trades if you're willing to take some big risks, of course. As of now, because it's 3 days until referendum, please lower your risk and trade accordingly. I already gave you my opinion. I need to be, of course, neutral, and there are pros and cons of Brexit. Well, but the only thing what I would do if I would an official, UK official, I would definitely renegotiate the terms with European Union. Well, that would I do, okay, definitely, because not all is good for UK if it stays in European Union. So renegotiation should be definitely one of primary things if UK stays in European Union, but we will see, okay, we will see. Polls are changing each day. One day it's stay camp leading, next day leave camp leading, a lot of polls. Bloomberg says another thing, other polls say other things, so definitely it's a big mess now. So for traders, you definitely need to pay attention to lower your risk, okay, lower your risk, guys. For people who live in UK, well, you already know, guys, what you will vote for, but there are pros and cons for both scenarios, and well, we will see, definitely. So Australian dollar, you see the setup for Australian dollar was pretty much clear. We had a position sell given at 74.20, price went to 74.05. Well, see, very close, this was actually POC zone, where at the bottom of our POC zone, the price spiked up and went down. So Australian dollar, a great setup, really, a great trade. AUD was a sell. Well, a lot of pips could have been made here. I told you to sell at 79.00. The price made it to 78.75. And actually, you see, it was a bit, it was like 5 pips shy from POC zone. But then again, well, it was it was screaming sell, right? So even if you traded like here you could have made some good pips. So either you made something or you made nothing. But I think that if you follow just simple explanation, AUD is in downtrend. Okay, well, this was indeed a downtrend, and you see a good number of pips. And the New Zealand dollar, we first had a buy setup, and we were stopped for 10 pips. I told you this was the best what I could think of, because if it was sold below 70.29, we would have seen a big movement, and it happened actually. First we had like -10 on New Zealand, and then breakout sell happened. So this was our primary trade. But I always say, if you see scalp or breakout trade, you can take it as a second entry. So this was second entry, breakout sell. And you see, bang, it could have been, okay, you could have made some good number of pips, okay, and I hope that you actually made it. So let's move on to euro dollar today. Well, as I said, equities were up. We had a gap. I was afraid that this could have been a runaway gap or breakaway gap, that is non-tradable gap. And actually during early trading, we could witness that fear was very, it was pretty much rational, right? Because the pair didn't do anything. It just kept going up, and actually we might have seen like a breakaway gap. But now the odds are that the gap will be closed. So pay attention to this. Okay, I already did the assessment of euro dollar, and you probably seen it today on Alma Markets website. So euro dollar, beware of breakaway gap. But actually the thing is that I also predicted a possible retracement towards POC point. And the thing is that you see there is a trend line. This is V-shaped reversal. This looks like inverted head and shoulders variant. Left head, right, V-shaped reversal, trend line. This is inner trend line now because it's broken. And this is not a pattern, guys. So this is not a pattern. And you know how we trade gaps. We only trade gaps when we see an actual pattern. And this is not a pattern. This was actually looking like a breakaway gap. So, but I also said that it could be that the gap will be closed. And if it happens, well, guys, this is it. This looks like a roof now. See, this looks like a roof, like a complete roof, and actually this could close the gap. What I would trade here is, as I already did the analysis, okay, I would go for we need to actually put pivot on daily here. So definitely you see this could be a bearish pattern, and I would go for some potential long trades here. Okay, we have a lot of confluence here as already shown here on our see, actually very clear POC point, so it could drop here and then spike up. The setup for this trade is like it's shown on the slide. 1270, 1235 stop, 1330 target 1, target 2 is something in between 1380 and 1415. If we don't see any retracement towards POC, well, I would go for a sell at 1445 with stop loss 25 pips away, target 1380. Why? Because definitely we have a lot of history of selling at that level. So here you see, guys, a lot of history of selling here from these zones. You see, that is why this zone is important. And here, see, we could see a possible sell, but I just hope that the price will be sold from this zone here. Okay, see, because this zone is important for me here. A lot of selling. It could spike up, but definitely it could go down. So here, okay, could be a sell, and for this spot here, we could see a buy. So let's wait, whatever happens. And beware the spikes due to Brexit polls. I wrote this last week, and it will still be here because those spikes can actually kill some good profits from past months, so be aware of that. Pound dollar, I won't be doing any pound dollar analysis because now this is a simple sentiment driven trading. Whatever poll is saying, if polls are saying UK will stay, then buy the dips. If polls are saying UK will leave, then sell on rallies. So guys, nothing is certain now with pound, so we need to be careful. I will not do any analysis of the pound until I see the results from referendum. When the referendum is finished, then I will do assessment and I will give you potential trades. But as of now, I just don't want to trade the sentiment. I want to be technical, but not sentiment. I simply don't see the point of trading sentiment. If we see a new poll saying that UK will leave, then how we say goodbye Irene, good night Irene, right? Good night Irene, that is how we say it. Good night Irene. And well, another top will be made and we will drop heavily towards 40.00. So polls are definitely changing the sentiment and the trend of pound dollar or of all pound crosses. So no setup for now, only after Brexit, after the actual result. Australian dollar is in uptrend. 73.95 is actual buy position. This is a typo, guys, so okay, I will correct this. So it's a buy, 73.95, and stop loss is actually, as you can see here. Okay, so be very careful about Australian dollar, because also good if commodities are going up and sentiment that is that UK will stay, then this pair will also go up. So commodities can also move Australian dollar. But have in mind that if we see another poll that is saying that UK will leave, Australian dollar yen will fall, because Australian dollar yen is following equities, and it can also drop Australian dollar. So that is why there is some connection to Australian dollar, but the main connection is actually to commodities. Commodities that are correlated to Australian dollar are gold, iron ore, and copper. Okay, those are commodities that are correlated to Australian dollar. Copper, iron ore, gold. So see, this is what I see on Australian dollar, and here, okay, so see, there was a big buying here, okay, a huge buying here, and now the pairs are trying to retrace. So if it comes here, well, this will be the zone to actually place another buy. So pay attention to the zone. Sorry guys, screen frozen, now it's unfrozen. Okay, we defrosted our screen. See this now. Okay, this is the chart, and you can see that equity is down now, and well, Australian dollar also down, and I guess AUD down. Yes, you see AUD down. Well, that is the thing with these pairs. They are very, very correlated one to each other. So especially when there is some big news kicking in, so big news, big event. So see, this was a strong buying candle, and this candle is completely reversed by this candle. So I would buy this, really. I would buy here. So 73.95. Let's wait, guys. Let's wait. Okay, so let's wait for the actual setup. And I think that if it happens, if retracement happens, we could see some buying here. Dollar Cad, I would sell Dollar Cad, 28.80, 29.15 stop loss, target 27.50. Okay guys, a lot of people were asking me, why did I post a Euro GBP setup last week? And I said, guys, because yeah, that was clear to me that this could actually go down. And if you remember this analysis, guys, Euro GBP, I hope that you made money. I hope that you made money here. This was the setup of the week, Euro GBP, definitely. A lot of pips could have been made with this analysis. You could have read it here. Here, Australian dollar CAD. Okay, I will now show the chart. Yeah, this is typo, guys. Don't worry, I will clear this. So it doesn't matter. This is Australian dollar CAD. 28.80, 29.15, 27.50. And dollar CAD, Okay, why 28.80? Because guys, this is a rooftop here. See? A roof. We have a roof. This is so-called roof pattern, guys. Okay, maybe some of you don't know about a pattern. Well, this is why I'm here to teach you. See? The roof. So if we see another retracement towards this spot here, confluence, I would sell it. So 28.80, sell. It should go down. This is stop loss and this is a target. So here Dollar Cad is indeed bearish, as you can see here. It's bearish. If you zoom out, see, this is high, low, lower high, lower low, lower high. Now this could drop here, but even if it doesn't drop immediately, well, it can reject from this spot. Ronald is asking, is the retracement pivot or MA? The retracement is always, Ronald, POC zone. POC zone is my trademark. It's point of confluence where technical patterns and technical tools meet to give us possible rejection or entry. So whenever you see POC, you can expect that the price is going to react within the zone. So just follow my analysis, daily analysis with Admiral Markets, and follow my webinars, especially these recap webinars, so you will learn what a POC zone is. So this is actually the zone where I will short it. It's not only based on MA and pivot point. It's based on rooftop, so that is another part of the confluence. It's based on historical sellers. There are a lot of historical sellers. And it's based on historical head and shoulders here. That was failed. But nevertheless, this was a setup for a short trade. So historical head and shoulders, now historical sellers, rooftop, and even you can add Fibonacci. So if you add Fibonacci, and this was the actual swing high to swing low after this rooftop, you can see this is 61.8. So a lot of confluence here, and if we see a retracement towards this POC point here, maybe we could experience another selling. That is where I expect now moment sellers to align with historical sellers. And dollar yen, I will be short in dollar yen at least next few days. Equities down, dollar yen down, Nikkei down, dollar yen down. Don't forget that dollar yen heavily follows Nikkei, Japanese 225 index. Nikkei is very active during Tokyo session. Dollar yen is correlated like plus 90 to Nikkei. So guys, be careful. Okay, yes, I still see dollar weakness versus yen, but not during Brexit, guys. I'm still speaking pre-referendum, okay? After the referendum, I will give you possible trades. We will see what happened. We will go through that together. We have a webinar after Brexit, so there will be setups probably. Well, the TP was maybe hit, but I'm waiting for retracement. I want to see retracement, okay? So I want to see retracement. Let's see dollar yen. Okay, here, see? 4 hour, but we can switch to 1 hour. Watch this, guys. Okay, so 105.10. Here. Even here, guys, it could reject. So like 20 pip the zone. The zone is like 20 pip. You see? We also see some form of ascending triangle, but if we take it in the context of downtrend, we could deem that this is actually a pennant, right? Flag. So actually, yeah, I would be careful with any long positions. It might go long from this, but this looks very short to me, right? It's very it's bearish indeed if you take the broader look. Okay, watch this, guys. It's very bearish, right? So this, it looks like a triangle, but actually if this is a pole, we can think of this as a pennant. Okay, like it's not a flag, it's more like a pennant. So yeah, it really looks bearish to me indeed, guys. Watch this. A lot of selling here and consolidation. So a spike here and new sell. Let's see. So that will be my setup for dollar yen. Now guys, I will okay, so now I will definitely go through the slides again. You can ask questions, and I also invite you to use our handle, Brexit handle. So guys, if anything is not clear, please send me a tweet, okay, and I will give you the handle, okay, so the hashtag AM Brexit FAQ. So please guys, okay, use this on Twitter and I will answer all questions, okay, all questions for Twitter. I also did, you probably saw it, the article for Brexit, and I hope that you've seen it. Okay, so let's see here. Chris and I did it together. Here is, and it was also published on Forex Street. So some things that you should consider. So guys, and if anything is not clear, please use this hashtag. So let's use these slides once more. And guys, of course, feel free to ask questions if anything is not clear. Okay, here. Euro dollar, pound dollar, Australian dollar, Dollar Cad, I will correct this, and dollar yen. So guys, if you have any questions for any other pair, you can actually ask now. We will go to euro dollar now. See guys, if you open 4-hour time frame, you see a roof. It's like inverted V-shaped reversal, you see? And it could close the gap. So that is why we could potentially at least take some profitable scalp swing trade for a 20-30 pip out of from this level actually. ODN, well, ODN guys was a bit nasty because it was very bearish previous week and we had a close on Friday that was bearish, you see. But the problem is the gap. The price and the exchange rate on ODN gapped during the weekend. So all these shorts that have been placed here have been closed, probably killed. and now the price is retracing. So the only thing what I would look for ODN is equities now. Okay, equities. Equities cause gaps, guys, because market when it opened, there was a big spike on equities, and those equities caused gaps. Gaps are seen on retail market, not on inter market. Okay. Now ODN is definitely in longer term downtrend. And yes, if you ask me what I would do with ODN, I would go for sell on rallies. But the problem is, guys, if we see that equities are up again, because next poll might say, okay, there is a huge difference between UK and between stake and leave camp, where stake camp is leading by 10%. Then there will be probably spike up. But technically this is short. Now, even if you take a look here, what do you see? Very close to 88.6. So it was like in between 78 and 88.6 rejection here. Okay, watch this, guys. See the zone. And now it's rejecting. But the thing is, this was also a short signal, and audience spiked up where it faced now moment sellers. Now moment sellers are trying to pull the price down to close the gap, but I don't know if it will happen. So be careful. There could be some irrational movements now, simply because the event will be that strong, so strong. So don't underestimate the power of UK referendum. Don't forget that UK is a very strong economy, a colonial force. So guys, there will be some big implications in future of European Union if actually UK leaves European Union. So I will tell you what I expect to happen in both scenarios, but please let's wait until few more webinars, and there I still have some possible outcomes for pound crosses, but just sign up and wait for that. I will explain. But for session recap, we won't do that, guys. Okay, we are not trading pound at this point. So these are all setups that I have prepared. So 50% risk, please guys, lower your risk to 50%. Don't play with don't gamble. I know maybe some of you are gamblers. So if you're a gambler, then go for it. If you have the excess of money, why not? But if you want to be a bit more professional with approach to trading, then just lower your risk and you will be safe. It's not in your interest to actually play with Brexit polls, right? So here, this is it. I don't see any questions, guys. So I'm not sure if everything is clear, then we can call it a day. So once more, recommendations are euro dollar, okay, Australian dollar. This could be maybe the lowest risk trade, because it looks like it's moving also per commodities. So if equities are going down and commodities are up, it could actually affect Australian dollar to go up. Dollar Cad 28.8, I will correct this typo. And ODN. The question is, how do we get fib with 7688.6 lines? Easily. Go to Fibonacci and just enter here 0.78.6 in the description field. You should enter 78.6 and add. Okay, press add and then add 0.886, 88.6. Okay, so this is actually how you do it. Okay, see? So add and then place this and this in the respective field. So here it is. Next question. What could be POC for selling New Zealand dollar? Actually, that would be counter trend trade, because this is now, it goes up here, here. You see, this could be now possible sell on New Zealand dollar, but I'm still not sure whether it will happen, because we saw a historical buying here, and there were historical selling. Now the price is very close to historical sellers. So here, this is an important level on New Zealand dollar. Dogan is asking, if you were short euro dollar around 1.11, would you hedge or close the position? I would hedge, probably, or I could close position if it's not a big loss to my account. Okay? Swiram is saying, I'm a gambler on Euro 2016 Championship. That's okay. No problems with that. And Euro New Zealand, okay? Euro New Zealand. Let's see. Euro New Zealand is not that clear. It's actually in form of, yeah, it's consolidation. This is a consolidation, potential break to the downside. So this is actually uptrend, but it's consolidating. So if you see that it's breaking this 61.8, you could probably see downwards towards 78.6. So pay attention to this breakout or spike. This is now consolidation on Euro New Zealand. So clear consolidation. David is asking, what would be your hedge? Well, I wouldn't hedge euro dollar by selling euro dollar and buying euro dollar. No point in that, Dogan. If you want to hedge, then you sell euro dollar and buy dollar Swissy. You actually hedge euro dollar with negative correlated currency pair, and that is dollar Swissy. So if you have euro dollar sell and you're not sure of your sell, you should definitely hedge it with dollar Swiss buy. Okay. Or did I express myself correctly? No, dollar Swiss actually like this. Okay, dollar Swiss sell. Okay, because you were selling euro dollar, right? So no point in buying dollar Swissy. That will expose you to double the long on a dollar. So if you're selling euro dollar, you actually want to hedge with dollar Swissy also. With dollar Swissy, you are selling. Yeah, okay, that's clear now. So your entry was 111. That was your question, right? Your entry on euro dollar was 111. Okay, let me see. Let me do a quick analysis. Okay, just wait a little bit and we will check everything. Okay, so you are in a drawdown now. Okay, yes, because you sold here. So you sold it, let's say here. Okay, you sold it at support. I'm not sure why, but this was a big support. Okay, but you already sold it. Okay, so if euro dollar goes down, dollar Swiss goes up. Okay, so you can check it here easily. Correlation, trader. So try to watch negatively correlated pair. For that, the best is Dollar Cad. Okay, we will use matrix. So let's use, okay, here, let's use 1 hour 200 bars. See, it's minus 69. It's not that strong. Let's see, 500. Yeah, it's strong actually. Midterm also strong, so it's good correlation. It's always good between dollar and dollar Swissy. So So you actually, if you open a buy position, there is no point. You can actually close your position, and I never saw the point of hedging when you open two positions, euro dollar, let's say sell, and euro dollar buy. You can close it. It's like that. So you actually want to go counter. So if you think that euro dollar will go down, but you are not sure, then you should hedge with dollar Swissy sell. Because if you open a buy position on dollar Swissy, you will be double exposed to dollar. But if you open a sell position on dollar Swissy, okay, if euro dollar goes up, then dollar Swissy will go down. So you actually are in the hedge, and you will unhedge when you see the clear movement of, let's say, euro dollar. So if you see that euro dollar will continue going up, then you unhedge your position by simply removing dollar Swiss sell. Okay, so it goes like that. If you buy dollar Swissy, then it's like you have two euro dollar positions. Because if your euro dollar goes down, well, dollar Swissy will go up. Okay, so it's not hedging. You actually want to hedge selling euro dollar and selling dollar Swissy. One of your trades will be negative, but you're selling. Okay, so if euro dollar will go down, dollar Swissy will go up. And then when you're in profit with euro dollar, when you make profit with euro dollar, you need to watch dollar Swissy resistance for counter trend trades. And when dollar Swissy goes very close to resistance level, okay, let's say here, this is a good zone to sell, okay, then you unhedge, and actually you just leave your counter trend going. And then there is possibility that dollar Swissy will go down too, and you can make a profit. But if you open euro dollar buy and euro dollar sell, it's like you close your position, because every close of a sell position is automatic buy into the market. And that is what platform does for you in the background. So it's always good to watch for counter correlated pairs, negatively correlated, and then hedge. You see, Australian dollar is actually very negatively correlated with dollar index. So watch this table. This is of immense help for all traders, correlation table. Okay guys, so that's it. I don't see any questions. So as I said, be careful guys. Okay, be careful. Don't risk now more than you can afford. Even though if you think that you're right with setups, well, the market, simply because of the sentiment, might prove you wrong. So be careful guys. Don't risk your monthly profits because you want to trade. You actually need to know when to trade and what risk you should use. That is why trading is a long-term process. It's not a simple buy and sell. That's nonsense. Time factor is very important. Yes, strong versus weak currencies is also good. But at this point, as I said, Mario, pure sentiment that is driven by polls might change. So that is why you need to keep it a low risk. Keep it low risk now, guys. Listen to me, okay? I know what I'm saying. I know what I'm speaking. If you want to trade, do it with a low risk, 50% low risk. Okay, no questions? Then we can call it a day. Pay attention to possible euro-dollar retracement towards POC and a potential buy setup. It might happen during Tokyo session. We will see. Until tomorrow, guys, I wish you to trade safe. I wish you to be well. And, okay, trade safe. Lower your risk. Cheers, guys. Talk to you soon.